Fed could move in June if data is clear about economy state, says Haymack. Fed could move in June if data is clear about economy state, says Haymack. Fed's Haymack says lower stocks, bonds, and dollar trade should be monitored. Fed's Haymack says lower stocks, bonds, and dollar trade should be monitored.
Hey guys, welcome. I haven't done one of these in a while, so hopefully it goes off without a hitch. Hope you're doing well and surviving this volatility.
Just more than 10 minutes now at the top of the hour. Look out for multiple central bank speakers. ECB's Lane, Bank of England's Lombardelli, and Riksbank's Syme speaking in DC at the Peterson Institute panel on review of monetary policy strategy by central banks.
If you're hearing the squawk, I apologise, but I'm not turning that off. Okay, I'll wait for a few more stragglers to turn up. So I'm just getting back to this after a couple of weeks away, Easter. And I've come back. I missed most of the big volatility. It just started when Trump announced these huge tariffs based on some gobbledygook numbers that he came up with. And so we're trading.
Haymack says it's possible Trump's view on the Fed chair could affect data.
Extreme volatility environment. So it's pretty difficult and it gets very messy. And my advice to anyone trying to trade this at the moment is really sit on your hands as much as you possibly can. It's just a case of trying to wait for the right opportunity where things are in the right moment, the right things are setting up, and not over trading. Unless you're a scalper and you like this kind of volatility, which some people are perfectly capable of doing. I certainly am. I like trading, I like scalping, but it's very, very difficult to sort of remain objective, looking at the bigger picture when you're always in a trade. So it's the way I set up at the moment is I like to sit and watch and wait, and if I don't know what I'm doing or I don't understand, or if there's too much volatility, I'll just dial back, pull out. Yesterday I didn't trade very much. I just took a couple of trades, one on the open in oil, which didn't work out at all, took a couple of stops, and then I took one short in ES quite late on in the session, but it gave me a nice payout in the end. But the key point I'm trying to make is I'm waiting. I'm very, very patient at the moment. I'm either trading a headline in which, if I can handle volatility, if I can locate and spot a nice bit of liquidity that I can trade off, and more key is I feel comfortable putting my risk, and I can set
US
my risk.
2-year yield falls after
I'll take that
Haymax says a
trade,
June rate cut is
and if
possible.
I can't, I'll sit back and just watch it and see what happens. So there's no pressure on me to trade at the moment. When trade hits off and you nail it, you get paid pretty well. So there's no need to be rushing into trades. You're going to take a lot more losses in this kind of environment. I certainly do. My hit rate's gone down. But the key thing I can say is just sitting back and waiting for the right opportunity. Okay, I'm just going to quickly go over my prep. I posted it on... Where did I post it? I posted it on Twitter. Let me go find it. But basically the key levels that I'm looking at are trading into these 52s. Sorry, 52s. Trading into these 10s. Yesterday's POC. Let's have a quick look what happened yesterday. So yesterday we opened with a true gap to the upside. This is just a 5-minute chart just to quickly outline what happened yesterday. We traded with this big gap and you just saw, look, straight away buyers coming in. And also don't forget the day before we also had, or the night before we also had Nvidia, tech heavy, ES and NASDAQ. They ripped higher as people scrambled to cover as Tesla and other tech stocks had rallied overnight. So we got this like big push, but then we held this very, very key level, just breaking the prior week's high by a couple of ticks, couple of points. And but you can see we had 1, 2, 3, 4 clear attempts, and no buyers could break that, or they, the sellers were there, supply was up there, and it resolutely resulted in a big move to the downside. Got a terrible echo, I can hear it. Okay, anyway, so we had this big sell-off. This is a typical island day where basically positioning gets trapped one way or the other, either has to give up the ghost and shorts have to cover, or eventually buyers give up and then pull back. But the trade that I took yesterday was this trade here initially off the IB. We pushed through the IB low, pulled back into the IB to the tick, and then it came. That's very rare for that to happen. Very, very, very tight risk. I didn't have to wear it offside very much. But that leaves us with this, this lower distribution. We've got this upper distribution at the top here, where we did a lot of volume. So you can see yesterday's profile is setting up a little bit like a double distribution, with this break down the middle where that 42 area is, defining the middle of the range, which is pretty much the middle of yesterday's range as well. Okay, and if anyone asked what my targets were yesterday, I posted it as well. It was down into the 80s, 85 area, which was the half gap mid, which is statistically high probable target. Okay, so what can we expect from today? So today, let's bring in the let's bring in some more data. Let's bring in the overnight, see what's been happening. It's going to take a while because I've got a lot of data loaded up, because I've had to pull in a lot of data from the past so I can get some levels of where to look for support, resistance in this, because we're trading air. We've been trending for a rather long time. I've always tried to keep things light on my Sierra chart, but now we're coming back down into old ranges, and I need to pull in some of that data. All right, so basically what's been happening. So yesterday I kind of stated that if we can just hold below the POC, which is here, 54.10, we would be under pressure to continue lower. And pretty much off the open, that's pretty much happened. We had this kind of open just below the POC, and then we just liquidated lower. Didn't take yesterday's high, which kind of end up with this big bounce, but it was news driven. There was a news headline that came in. I posted that last night as well, that basically said that Trump was willing to reduce tariffs on automakers in the US. That's big news, right? So, at the moment we're trading this news environment where any kind of headlines can move this easily a good couple of percent. Smaller ones can also have a big effect, and to this one we had this move from around about 88 all the way up to 35.
Corporate issuance, new dollar deal, Bank of America.
Oh, it was this one here, sorry. Here. This was this move up here up to 35s. Okay, anyway. But
with a senior preferred deal in the 7% area.
We're unable to regain 42s, which is today's POC. So, sorry, we spiked up on the headline and then we just kind of came back down. Came back through. That POC didn't quite hold. And then we've been traversing lower ever since. And we've had this big pullback where we have seen that area now hold. That POC from yesterday is now holding. We had this swift rejection not long ago, where but we're back up there now, going into the open in half an hour. So this area for me is a big area of significance. With this kind of volatility, levels aren't holding very cleanly, but when they do hold really cleanly, that's a good sign for me. I like those trades, and I'm always looking for any signals that buyers or sellers can't get through an area. So if it touches it to the tick or fails just below,
but just for anyone that didn't catch that,
I'm always looking for
new
that
corporate
kind
issuance, new
of
dollar
very
deal,
nice,
Bank of
neat,
America
tight
with
axis
a
where you can
benchmark,
clearly define where you're going to be wrong,
perpetual
which is if it
non-callable
moves above that level. But
5-year deal
we're now
in the
seeing that
7%
POC
area.
yesterday holding to the downside. Now I expect that's basically what's been happening overnight. I've summarized that in my overnight prep. If you've spotted that on X. The one thing I'm kind of looking at, this is my bigger time frame, and I can just see that the market has basically had this rather steep drop, but we've bounced back up almost like a P distribution, and this is the upper P distribution now, where we're quite balanced between 5,500 and down 5120s down the bottom of this range here. I've marked that out on my prep as well for you guys to see, but this balance area makes things trading in the middle very tricky. And I'll just highlight that now by, if you have a look at my profiles, you can see, like, look how many lines I've got just dotted around in the middle of this range. Just so messy. I like to see one clear area where I'm targeting, or I'm looking for support resistance. It makes things clean. But when you've got these overlapping levels, it makes trading really messy. So what I like to do is I either like to trim away some of this by identifying levels on a slightly more consolidated level. So what I'll do is I'll amalgamate some of these
Fed funds rate unchanged, 4.33%.
Some of these daily profiles, and just try to create a more unified look of the overall market. And that's kind of what I do. Or another thing that's really useful is just looking at the weekly profiles, which is something I really look at. So you can see here, this is the current developing weekly profile. We've got a value area high around the 5406, which is coinciding with yesterday's POC. But basically, I'm relying a lot more on these bigger picture areas to look for where I'm looking for bigger turns. And you can see where we've had this this high overnight. It just coincides with the prior week's POC as well. So all these are levels marked out on my charts, but this is just a nicer, cleaner way of looking at things when things get really messy, when you're trading in a lot of overlapping profiles. It gets messy. So highlighting, I'm highlighting the levels for my day trading from a slightly more consolidated composite view. So this is the weekly, but the other thing you can do is create a composite. I think I've done it in this. No, I haven't done it in this one. Let me just remove that. So I just want to show you how I've done that. So if you're using Sierra Chart, which I believe is one of the best trading platforms and charting platforms out there, this is how I do it. So you can see all these really messy levels. I've kept them in there on this chart, but I've got other charts where I've got it a lot less messed up, a lot more cleanly. But I'll just reset this just to show you. So we had this big spike high when basically Trump pulls back from the tariffs. And then since then, we've been trading inside that candle from the 9th of April. I've missed all this because I was away. But what I'd like to do is, all these candles, they are
in the equity space, specifically tech, the information report that Apple's India manufacturing push faces spoilers, including China. They report for several years Apple's been working hard to make more of its iPhones in India so it can reduce dependence on China, where around 80% of its smartphone production currently lays. Chinese government and its tensions with India are getting in the way, though.
Sorry, just let him finish talking. So what I like to do is identify the key pieces of information and highlight those. So we've got this big gap from the 22nd going up to yesterday's lows, which is down at 84s. So this area here, this is the high here, and this is the high of the 22nd, and then this is the low of the 23rd. So that is a nice big gap that we're now trading in overnight. So I will highlight that area. You can see it's highlighted. That is an important area. I'll also highlight the gap mid. I like to break these big gaps into big chunks that I can kind of concentrate on, because it just makes things easier. So I will highlight the 50%. Basically I'll put a fib in there, and I'll drill 25, 38, 50, 68s. That's just something that I do. But the one I really look at is the mid, the gap mids. Important. So I've highlighted that piece of information. I'll highlight the prior day's highs, lows, all the key MGIs from the prior day's auction, and then the most relevant recent one below as well. Take those, take the prior high, take the value area high, take the mids, just take the key bits of information, and then you want to try and keep as much of that as possible.
Apple's planning to increase
but then
iPhone
it gets
production
really messy because we're trading in this
year.
big area of balance between 5,500 and 5,130 something. So what we'll do is we'll just merge this. We'll just do a big merge. Okay, and normally the criteria for a merge has to be overlapping. I've got overlapping
as we covered
value.
earlier. Reuters now with the information that Bank of America cuts the target price of Apple to
as a general rule, I will look for overlapping value to merge profiles, but we've got a lot of overlapping, and then it kind of gaps high, gaps lower. So I'm going to have to make some rules on the go here just to make things clearer for me to trade, because I can't trade all the, we're trading in 500 tick ranges, and if you look at each little nuance of each profile each day, which I do, but if I'm looking at it all the time, it just becomes too much. So I want to look at the big turning places, turning points, and I do that by merging my profiles, or I use the weekly profiles, which is equally good. And a lot of times you get the overlap. I'll be honest, a lot of the time I am doing that one, which is look at the weekly. All right, okay, so I'm just going to merge now everything. See if that works. There you go. I left these gaps, and you can see I've left the last two profiles which have left us with a gap where we had a high that failed at the prior week's high. We just looked above, failed, and then that gave us a big move to the downside yesterday. If you were smart enough to look for the sellers up there, you could have made some good money up there. I was just short of getting my position on at 54.80, and but I managed to catch it at 54.42, and it got down to 53.84. So if you spotted that up there, that gave you a good opportunity for a short to the downside. And overnight we've seen this continuation lower, which to me is normally a good signal for a continuation move to the downside, which is what I'm kind of hoping for. But you can see now I've merged my profile. I've got a lot less information from the profiles. I've still got all my lines from before. I could delete those if I wanted to make things cleaner, but I'm not going to bother right now. But you can see we've got the high at the that merged profile high. We're seeing that big candle, that Trump reversal candle from the fourth line, that tail highs holding nicely up at 55.20. But now it looks like we might be, we've tested the upper range of this balance being this merged profile I just created. We've tested the upper range of that balance, and now what will happen is we'll start to traverse back down again. Okay, so I have a slightly downward bias, but I'm also looking for clues to make sure that my bias is confirmed or rejected. So my thesis is down, so I'm looking for negative short negative bias on this in this market. We've seen a lot of headlines, some being taken back. I'm kind of lost with it all at the moment. But as we you know, from a purely technical point of view, this looks like it's failed at the upper range of this range, and now it's sort of traversing back. So I'm expecting to see a nice test back into that, try and close that gap. If that gap holds, then that signals to me that this has got an upward bias. You know, buyers are still trying to defend this area. If I see any kind of, you know, even if it fails by 1 tick, that could be a bullish signal for reversal. So if we trade down to 54.40s, 1 point above the gap at 53.39s, just 1 point, that could be a signal for me to get long and look for the move higher. So it could be open rejection, reversal type of trade where we've opening with a gap again, potentially. I think we're actually trading back inside now. Yeah, we have traded back inside since I started this thing, this stream. But if we reject lower prices, we could end up with an open rejection. So we attempt to move in the direction over overnight travel, we reject and move back inside range of yesterday, then that would be a bullish signal. So if we can hold above, you know, yesterday's range, that is a bullish signal. You know, given the fact that yesterday we you know, we had a huge gap higher. Sellers attempted to trade back down, close the gap, but we're not going to make it. We're not going to close that gap. That's a signal that this has got a potential for the downside. But I'm remaining open to the idea that this has basically shot its load, failed at the extreme of this balance range. Or what we're doing is we're coming back, we're going to find buyers, and then we're going to keep traversing up. So like a P distribution, you want to kind of trade the P. You've basically got a tail low, a spike higher, and then, you know, basically buyers running out of steam, and then they come back, and then you want to be focusing at the extremes of the upper profile and looking for buyers at the bottom of the upper distribution range. So this would be defined as, for me, somewhere around this gap here. So if buyers can hold this gap, then this could be a signal for the upside. All right, so basically I'm just showing you how I merge my profiles to give me a slightly cleaner picture. The profile looks a bit messy otherwise, and it still does even with that. Sometimes it's nice just to have a clean chart without all your levels. I'll just give you a view of what I like to look at sometimes if I don't have all my levels on there. And I've just got, this is just a 5 day, a monthly and a bigger picture profile on the side. And I've just got my profiles with just the most basic information, highs, lows, closes, POCs, and not much more. So there's a lot of information. The key thing is that when you're trading a lot of products like I do, you just want to recognize the lines. I don't really pay too much attention. I recognize the patterns, I recognize the lines. I'm not focusing too much on the you know, on little details, but my brain can just kind of recognize, okay, we're trading at this line. I know what this means. Okay, this is a hold at, you know, hold of POC. Okay, right. Okay, well then this has probably got a chance for a reversal. So it looks messy, but ideal scenarios where you can simplify things for yourself so that you can just recognize little lines and just see where we're currently trading relative to all those little markers you've got on your charts. All right, I think I've gone through enough. My prep's up there on Twitter. You can see basically the key points which I've briefly spoken about. I'm remaining open to the idea that we could, you know, hold and push up above 54.10. But if we manage to hold 54.10 to the downside, then this could be another leg lower. Or sellers have failed to close the gap overnight. We've not managed to close the gap. I would have expected that to happen actually, but we've found some buying, and then basically we'll end up just traversing back up above 54.10. So that 54.10 is a key area for me to look for being yesterday's POC as well. I want to keep a key eye on that 54.10 and 54.42s, which is yesterday's mid and IB low. I hope that makes sense. Any questions? For those of you, I used to do these. I don't do them anymore, but I've got a bit of time in my hands, and I thought I'd do this for you guys, if it helps. If there are any questions, I'm happy to answer any. Oh, it's my pleasure, Brent. Other products that I'm kind of looking at are oil. I don't know if anyone trades oil in here. I think pretty much ES centric or NQ. But oil's had some pretty decent trades. I don't know if you journal or if you look for setups, but there was a really nice move up into the prior week's mid. But then we came back into the prior week's POC, so traded 63s down to 62.30s, 70 ticks. But the areas of engagement I was looking at, which was last week's, the developing VWAP and last week's VWAP. So the developing weekly VWAP and the prior week's mid held to the tick, which gave me a good opportunity to short, and it came back down, traded into POC, traded 31s to the tick, and that was my out. So basically 60 ticks, 60, 70 ticks. But those are really nice trades because you can basically see the price action in those areas, and you just see basically it dries up, and then you take your chance, cross your fingers, hope to die, and I'll post that trade if anybody wants it up on Twitter. But there was some nice trades in oil. But the key thing in oil that I'm looking for is this 63.10 level, which is last week's mid, and we've just opened now. We've had a test up into the pre-market open swing high. We failed that pre-market open swing high. Let me just bring that in. I'll bring a chart in to show you. If anyone's interested, this is my oil chart.
ECB's lane says QE.
So trade taken this morning was
bound. That was quantitative easing, only
this
to be
little
used
area
at
here.
lower
Let
bound.
me just widen it up a little bit so we can see. This little high here doesn't look very nice. Looks like an unfinished auction. A lot of people kind of frown upon that and say, oh, it's got potential to go high. Yeah, it does, but it doesn't have to happen at that moment. But basically there was a short there, which was, I think, the week's
IMF cut Asia's economic growth to around 3.9 this year, 4% next year.
All the way down
They
like
say
a
many
stone,
Asian central
touches
banks
the
have
prior
room to ease
week's
monetary policies to cushion
VPOC
economic blow from
to the
US
tick. You
tariffs.
see that? There's the VPOC there, lovely. Just 2 ticks below.
But Asian policymakers' FX
And then it
flexibility
bounced.
will be a key buffer
Actually, I
against
just
shocks,
got-
but FX intervention may
I
come
just
into
got
play.
caught. I mean, I really wanted to try and get long that area, but I didn't manage to get the fills after getting out of my trades. But then it's now
Polish
gone back up.
MPC's
That
Litwiniak
unfinished
favoured
auction
50
that I was
basis point
just
rate
mentioning
cutting
there,
move.
where I got short at 63.
Says
Well,
the
then,
Polish MPC should
as
continue
it
rate
trades
cuts
through
as
that,
it
you're
took.
looking for stops. So if that
Sees room
stops
for
through,
100 to
that gives you a good
125
sign for
basis points of
continuation.
rate cuts.
But
In
on
Poland
this
this
open,
year,
we have seen a big failure. What did the open do? It opened. Where did it open? It opened at 63, roughly that prior week's VWAP, and it's kind of ramped up, but it failed to take up that pre-open swing high. Now that to me is a key area for me to go short and look for the continuation move lower. Now remember, let me just reset my TPOs. Yesterday was a liquidation day, so we're now looking for signs that the buyers have, sorry, not the buyers, the sellers are re-engaging. Where are they re-engaging? Well, it's up here at yesterday's open pretty much. Anyway, so this is just another product that I trade. I really love trading oil. Sometimes you get some amazing risk on, risk off on that. You know, very few, you know, people think that you can trade oil with a 2-tick stop, but you can. Not every day, obviously. Sometimes you can. You just got to be really observant. This is where trading with a group is really good. Any questions? Do you also use market profile and CL? Yeah, I just did. I just posted my CL chart on you know, using market profile. I trade everything. So my trading screen has got everything. I've got market profile for every product. I've got a big 8K screen here in front of me, and I've got these. And when I see something that I like, I'll just bring it in, put it up. So this is gold currently, which is having a nice little pullback after hitting that 3,500 level. Let me just get rid of this. So that's gold. I look at bonds. I look at currencies at the moment. Currencies are really good with Trump pointing fingers at people and putting sanctions. So you want to have your currencies up. The dollar index as well. You've got a bit of Bitcoin up there. I don't really trade that, but I've got it up anyway. But yeah, just overall, I'm pretty much trading anything and everything. If there's a macro theme going on in the markets, I will trade whatever product is moving, whether it be bonds or equities. But if there's nothing, I'll fall back on trading ES&Q, Russell, and oil. Those are my 4 markets and a bit of bonds. Any other questions? I'm doing this on YouTube. I've done streams before where people are allowed to interact with me, but there's
as
one
a heads up
instance
then,
where
coming to the end of the European walking session, there'll be a brief
people are quite
outage in
rude,
the service
and,
as we swap
I didn't like that.
over for the US session.
They somehow managed to grab a hold of my stream, which was quite funny, and they were drawing big penises.
Player refreshing.
Big penises on my screen, which I didn't appreciate.
Player refreshing. Player refreshed.
All on YouTube now. Not sure if you guys think this is useful, I'll do more of these AM preps. I used to do them when I was at what they called convergent trading for people. I think the big difference between me and other traders is the fact that I've got these ladders up. This is an edge for me. I know a lot of people don't have this kind of setup. It's quite PC intensive, but I've been trading like this for 24 years. And what it allows me to do is it just allows me to see anything and everything that's moving. I can see where things are trading relatively. I've got little profiles on here everywhere. I've got all things marked out like prior closes, highs, lows, IB lows, etc. So I've got a really, really good overview of what's going on in every market. And when things get really, really busy, I'm really playing on correlations, and I can basically make calls not just on what I'm seeing in front of me on the product I'm trading, but also I can make calls on, if I start seeing a gold reversal, maybe I want to get out my bonds, or vice versa. If I'm trading Nasdaq, I see yes struggling or not doing so well, then I might want to look to get out that position again. Or if I see one of the products go first, I'll look to trade. Maybe if I missed it, I'll look to take the trade in a laggard or something, but which has its own risks, and it's not something I do often. But when the market gets really volatile, those correlations can be really, really good. Other things I like to look at, especially at the moment, are copper. Copper and gold are really, really cool products to trade at the moment. Yeah, you love your ladders, Ben? Yeah, I love the ladders too. I think every pro trader, anyone on the floor I've ever come across, trades off the ladder. We started trading hundreds of lots. Well, we didn't start trading hundreds of lots, but we were all trading hundreds of lots in the Bund Bobble Shats. This is where we all learnt our ladder skills. Trading your IBOR, so really stocky, really big, liquid markets, and we just learnt how to trade ladders and read order flow by doing that for years. We didn't really understand technicals. No one taught us how to trade charts, but we did learn how to, read order flow on ladders, because that's the way we traded at the time. We were making more money queuing, which is, look it up, queuing and stacking orders in the Shats and Bobble and Bund than we were probably trading. But one thing that taught us was learning how to read order flow. We don't do that anymore. That's just the algos now just don't allow for that.
BNP Paribas CMO CEO says there's no sign of retrenchment of the US banks
I
in
think
China.
I'm already monitoring too much. The thing that I really monitor is at the moment is I've got Truth Social, Twitter, and a Reuters feed up, but no. I mean, at the moment it's all about repricing risk. So options won't give me an edge because they're susceptible to the same news risk that everything else is open up to. So no, I don't bother with that. Never have done. I would overcomplicate my trading, and the key to trading is keeping things super simple, really super simple. One tick failure is enough for me to trade. Don't need to look at options or anything else. Right, we've got about 7 minutes to the open, so I'm going to call this a day. I appreciate all of you being here. If you have any other questions, quickly I will answer them. Otherwise, I will stop this.
More from Paribas. The group has no plan to change current approach towards China and relationship with local partners.
Okay, yeah, key thing is to keep things absolutely simple. You want to make things binary. Like on, off, up, down, working, not working. That's it. Okay, all right, cheers guys. How do we stop this thing now? Yeah, we'll try and do it again soon when I've got time.
Walmart China say they're